What's going on, guys? Welcome back to another episode of Hustle with JesseW, and today we're going to go over how to get around PDT. Check it out. Well, guys, real quick, also remember to check out hustlewithjessew.com. That's my website. You can sign up for the weekly list there. You'll get information and lists sent out once a week, so make sure you take advantage of that. hustlewithjessew.com. All right, guys, so let's go ahead and jump into this video. Now, just as the title suggests and the intro said, we're going to discuss how to get around the PDT rule. Now, the PDT rule, for those of you who are probably new around here or new to trading and don't know, stands for the pattern day trader rule. Now, this applies to you in margin accounts. There'll be people in the comment section and there'll be people out there that you'll read in stock tweets and Facebook groups that'll tell you, no, the PDT applies everywhere.
This guy doesn't know what he's talking about, unlike unsub.
That's what's going to happen, and you're wrong. PDT is only for margin accounts, and we're going to go over everything in this video, so you must stay tuned. We're going to go over 3 ways to get around the PDT rule. The first one is going to be the cash account, how that works. The second one's going to be offshore brokers, okay? And the last one is going to be a special bonus at the end of the video. But before we move any further, do me a quick favor. Turn that little thumbs up like button there on the bottom, blue for me if you're on the computer. And I think if you're on the app on your iPhone or Droid, it'll turn white. So just gently tap it or smash that like button, whatever is most convenient for you. And leave me a comment in the comment section below. And what we're going to do is the best comment is going to be pinned at the top. So leave me your best, most creative comment in the comment section below, and we'll go ahead and pin that at the top for the winner of the comment section. And you're going to be like the king of comments for, I don't know, the day, the week, as long as your comment is the best. So go ahead and do that right now for me. And after you do that, we'll move forward with the video. So if you haven't, just go ahead and do it now. All right, I have no way of knowing whether you did or not. We're going to move on with the video anyways. So the very first thing we're going to talk about is the cash account. You've seen me talk about the cash account here on the channel multiple times, and that is because the cash account is awesome. If you are in a small account, meaning you are under $25,000, you can't really do day trading on a margin account. Now, let's reverse this a little bit because you might not know exactly how the PDT rule works. PDT applies to you in a margin account if you have below $25,000 in that account. You are not allowed to take more than, I believe it's 4 day trades in a 5 rolling day period. If you surpass that, or some brokers, if you hit 4, they will limit you and not allow you to take another day trade if you surpass that. They might give you a warning the first time and tell you, hey, you can't do this again. We're going to let it slide. You can, reset. We'll reset your day trades. You can keep day trading, but you got to keep it to less than 4. It just depends on the broker. Or they might say, if it's the first one or your second infraction, they'll say, guys, 90-day freeze. You can no longer day trade. So there's a 90-day freeze on your account. Sometimes they won't even let you open new positions, period. Even if it's for a swing trade, they'll let you keep your open positions and you can close them out anytime. But if you are trying to open a position, they will not let you open a position for 90 days. All right. And these are just the rules. It's just the way it is. And that's what happens with margin accounts if you surpass the allotted amount of trades that you can do in that if your account is underneath $25,000. Now, how do we get over that? Very simple. The very first way, cash account. You got $5,000. You don't want to trade in a margin account because you don't want to go deal with the PDT nonsense, because it totally is nonsense in my opinion. Then you put it in a cash account, right? You just go over to Webull.com, for example, open up an account. If you want to, there's a link in the description section there. You download the app. You fund your account with $100. You're going to get 2 free stocks currently valued between $800 to $1,600. And also when you have that, they periodically throw out specials where you download a few extra bucks in the account and you get a few extra free stocks. So it's free stocks equals free money, guys. Anyways, you can do that on Webull. You can do it on Charles Schwab, Street Smart's Edge, which is the platform I use for day trading, the Street Smart's Edge platform. Charles Schwab would be the broker, and I like them. I don't have a cash account. I have a margin account above PDT, but you can. I do have a cash account with them. There's just no money in it. You can have that. You can set up a cash account with one of the major brokers as well. There are brokers out there like Lightspeed where you can set up a cash account, but then you have to deal with commissions and platform fees. And in my opinion, it's totally not worth it for a new trader to do that and have to deal with all that nonsense. If you have a small account, you're going to be trading small size anyways. So, chances are you're better off suited in a cash account. Why do I say a cash account's good? Well, because as long as you have settled cash in that account, you can day trade as long as you want. So if you have $5,000, right, and you take a $1,000 position per trade, you could literally day trade every single day of the week, Monday through Friday, because that's $5,000 by the end of the week. Or you could take all 5 trades in one day. However, the very next day, if you did that, you will not have any settled funds in that account. Okay, you're not going to have any settled funds. Your $5,000 that you used up on Monday are unsettled on Tuesday. They will not be settled currently with current rules until Wednesday. On Wednesday, you should be able to day trade those full $5,000 again if you want. You could do it all in one trade. You could do it all in one increments of 1,000, whatever. It doesn't matter, right? You could do $2,500 on Monday in trading. Leave $2,500 there alone. Do not touch them. And on Tuesday, you can trade those $2,500. And then on Wednesday, the $2,500 from Monday will become available again, settled for you to trade, and so on and so forth. And that way you trade $2,500 every single day, Monday through Friday, right? As long as you have a $5,000 balance. We're just using that $5,000 balance just for a nice round number. So that's the way cash accounts work. Very, very, very simple. So now, what's the next option? Well, the next option is going to be offshore brokers. And I have never used an offshore broker. I'm going to show you one right here really quickly. But I've never used them. I never had to. I never had to go through that. But the way offshore brokers work is they don't have to abide by those PDT rules. So you could literally start with whatever their minimum balance is. Could be $500, could be $1,000. You can go from there. I think that puts you at a huge disadvantage. Starting as trading account with $500, especially as a new trader. There's a lot of people out there marketing, oh, I turned $500 into $500,000, and like that. It's not real life, guys. That's not what's going to happen for a first-time trader, all right? Especially when they don't have a chat room behind them buying, low-float stocks and just a whole thing, right? We don't have that. You're not going to have that available. So I wouldn't go by that route. But if you're interested in more information on that topic, I have a video out called Why Small Account Challenges Suck or something like that. It's on there. I'll probably link it somewhere here for you. So you might want to check out that video. But regardless, let's jump into the offshore broker here. Okay, so here you have CMEG. This is Capital Markets Elite Group. This is an offshore broker. When you go to the website, you'll see a pop-up like this. Okay, this pop-up says, it looks as if you may be in the United States. In accordance with Rule 15A-6 of the U.S. Securities and Exchange Commission's, Capital Markets Elite Group does not accept U.S. persons as clients through this website unless they certify that they were directed to the website by someone other than Capital Elite Group. If you wish to proceed to the website knowing that, click and continue to the website below. Otherwise, click leave the website. So what happens is that they are not allowed to market towards U.S. customers. They're not allowed to market. It doesn't mean that you can't open up an account with them. You certainly can. They just cannot market to you. So how did you hear by them? You could have heard from them by this video. You could have heard about them by an article, etc. The point is that it wasn't them who marketed to you. I make no money if you use this product at the making of this video right now. On this date right now, I do not make any money if you guys use this product. I'm just showing it to you because it's an offshore broker and it's honestly the only one I know that works this way. There could be others and I'm sure there is. So we'll go ahead and click continue to website. And here you'll see, a little bit about the site itself, the way it works, what you can trade, equities, ETFs. They have all sorts of stuff going on. You got the platform. Okay, we'll click platform here. You can see they have Sterling Web, Sterling Trader Pro, which is software you download to your computer. That's Trader Pro. I love that software. Haven't used it in years, but these are the platforms they have. You can use a Sterling Web one, or you can use a Sterling Trader Pro, or the Dash Trader Pro. I like the Dash Trader Pro. I've used it in the past when I first started trading a few years back. And it's an awesome platform, extremely customizable hotkeys, so that's pretty cool. Then you have their pricing structure right here. Again, the pop-up, so continue their website. And you can see about their, about their details here. Standard has no platform fees, active includes platform fees, et cetera, et cetera. You can just look into that. This is not really a review on them. I don't really know how good their fills are. I don't know how good their customer service is or isn't. I don't know any of that because this is not a review video about Capital Market Elite Groups, or CMEG for short. Here, I have frequently asked questions. They have a phone number here you can use, etc. I don't really know, much about them in that sense. So it's just something for you guys to look into. That's all it is. And that's the way that you can do it. You just put your money there. You don't have to go buy PDT. You put, $2,000 in there. You can trade as much as you want. Like if you were trading in a US account with $25,000 or more. That's really how it works. If you're going to go that route, always my opinion would be you trade in there until you make enough to where you can go trade on a US brokerage with, $25,000 or more. All right, guys, so now that you saw number 1 and number 2, cash accounts and offshore brokers, what's number 3? Number 3 is the bonus, Jesse. You left it for last, so it better be good. Well, it is good, guys. It is good, and because it is good, it does have a little bit more risk to it, but it will get you around PDT. It will get you around PDT. But risk management, the thing with risk management and this option for number 3 is that I believe you apply risk management to every form of trading. I don't care what the vehicle is, whether it's stocks, futures, futures, options, or you're trading on an offshore broker, you're trading on US broker. It doesn't matter. Your risk management should always be superb when you're trading, period. I don't care if it's day trading, swing trading, long-term investing. It doesn't matter. Your risk management needs to be excellent. That is what keeps us alive in this game. Okay, so the third option to get around the PDT, in this case, there is a fourth, but we're not going to go over it in this video. The third option, we're going to keep this very, very safe because the fourth one is even more riskier, is trading options. It's trading options. I know a lot of people, especially when they're new, are a little bit afraid of options, and then you'll have some people down here that will say,
don't day trade options.
That's silly. That's ridiculous. I day trade options. I day trade stocks, okay? And I trade them basically almost the same. The pattern, everything's the same. You'll just watch my recap videos and you'll see me day trade everything from penny stocks, and I mean low float runners, not 50-cent stocks. I don't really do well with those. And you'll see me trade, $200, $300, $400 stocks. You'll see me trade options. There's even some trading of futures on my channel. Now, why is day trading options a route to go to get around PDT? Well, it's much like a cash account in the sense that when you trade stocks in a cash account, like I said earlier, if you have $5,000 and you trade $2,500 on Monday, the very next day, you'll only have available the other $2,500 that's settled, and then the day after, which is Wednesday, the $2,500 that you traded on Monday will become available. Why? Because it's T+2 settlement, meaning the trade plus 2 days. So you trade on Monday, that cash won't be settled until 2 days later, Wednesday. When it comes to options, however, it's T+1. It's great. It's awesome. Okay? Why? Because let's say you have $10,000 in your account and you trade all $10,000 on Monday, day trading options. On Tuesday, you would think, I don't have any more money because I got to wait until Wednesday. No, because it was options. On Tuesday, those $10,000 are available again. So the same will be when it was $1,000. If it was $1,000 you traded on Monday, you made $1,200 on Tuesday. You have your cash available for you to trade again. You don't have to wait until Wednesday. So this is why trading options is another way to get around PDT. So cash accounts, like I said, as long as you have settled cash, you can trade as much as your heart desires. Offshore brokers don't have to abide by PDT, so you can trade there, and you basically, doesn't matter how much money you have there, as long as you have the firm's minimum, you can trade as much as you want. I guess if you had $25,000 in the US, it has its own inherent risks. Your money's offshore, etc. That's, use at your own risk. Then options are risky, because options, like, you can get into an option, and if you didn't do your homework right, and if you didn't do your risk management correctly, you can lose 50% like that. Same day options, okay, can like just blow up your account. What I'm saying is that options that expire the same day, when you pick your expiration date, those are extra volatile. They're going to whip around, especially if it's something like on the SPY or Tesla, etc. They're going to whip around, and you can wipe out your entire account in one day easily. So typically, if you're going to day trade options, you're going to want to, give yourself some time there so that you can kind of compensate for some volatility, okay? Especially until you know what you're doing and you're able to manage your risk better. But day trading options is a way around PDT. Now, if you're brand new to all this, I'd say cash account would be my opinion to you day trade stocks, and wait for, so you get a little bit more familiarized before you start diving into options. That's all. That would be what I would say. But those are your 3 routes to take in order to get around the PDT here. You got cash account, offshore broker, and trading options. That's all there is for this video, guys. Let me know what you thought. Leave your comments in the comment section below. Remember, the best comment's going to get pinned at the top. Smash the like button for me. Subscribe to the channel if you haven't, and I'll catch you on the next one.